Hey, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, June 6, 2020. My apologies, the GoToWebinar link had a issue. There's a technical issue with GoToWebinar, so we weren't able to do the live event, but at least we have one that I'm recording right now here for you live on a YouTube channel as a replacement. As always, all information is for educational use only. I'm not making advice about to buy, sell, or hold, and by watching this video, do not make actual trades. It's all to learn the patterns, of which big breakout is the one that characterizes our current S&P, currently way up at the 3193, so right near 3200 in the S&P. NASDAQ taking out all-time highs, and markets continue to be on fire here lately. Really good, strong directional breakout. Now, it's precisely at times like this, as a quick warning, when everybody feels oh, it's safe to get back in the water, the sharks come out, and the market may well drop and chop next week. So just because it looks great now, the trend is your friend till the end, and so if it keeps going up, great, we play things long. Like gaming stocks and the casino stocks, the rental car, the cruise lines, and whoever else is going up. But do have on the radar the fact that the market may drop at any second, and usually with very little advance, with no advanced warning, right? You'll see the futures red. A big red day in the pre-market would be if you have the futures down significantly, a couple hundred basis points in the Dow and whatnot. So anyway, we'll see which way things run in our current markets. One thing to pay attention to, as always, is the VIX. You can see the VIX has been dropping here lately. We're at that key support level in the VIX at 25, and when technically we lost it. So we'll see if the VIX climbs back over 25. That's previous support was now new resistance. Major resistance is 35. So with the VIX on the decline, that means the market, the fear indicator or whatever, the fear indicator is going down, meaning people are kind of fearless, which is a good time to take some profit and lighten up on open equity positions. Another thing I want you to pay attention to is relative strength of sectors. For example, if you look at the pharmaceutical sector, it's been flat last week, but semiconductors have been racing up to new highs significantly. So do look at the difference, the delta in your sector charts, and give preference to charts that are to stocks and ETFs that are driven by continued breakouts versus consolidations. In terms of Rockstar charts, DraftKings is one of the ones leading the way. You can see it ran up nicely the past month and a half or so. It's pulling back off 45, but DKNG may be worth a shot if it takes out new highs. Ditto with other gaming stocks like Caesars and Penn and MGM and LVS and Wynn and so forth. But anyway, Caesars also up here at the 90-day high breakout. A couple of cheap charts that had been on the leaderboard scan for day trading scalping had been things like LK China Coffee, which have been trading successfully, so that's good. LK may be good for more. And Hertz ran from $1 to $4, right? Just under 4, 360 is up near 4 pre-market. Anyway, Hertz and LK are two cheap picks. They may continue on up. One thing to pay attention to also when you're looking at a game plan for the day is which charts have the best relative strength and also the best ranges. For example, GCI was a really big runner yesterday as well. So if you're a day trader and you're trading small caps, this mean reversion pattern is very common. You get a big run up and a drop around half or 50%, then a consolidation or a bounce, and that was the case with GCI yesterday. Chesapeake, a big runner, right, going from 16 to 26. WLL up for a cheapie. Oil instruments like OXY and Apache looked especially nice as well. So we've got emerging strength in oil, casino, airline stocks, right? You pull up, say, Delta and American, you can see Delta had been strong, kind of gave some back yesterday. American Airlines also. Kind of a gap fade. It had a really big strong day on Thursday, and it gapped up on Friday, and then it sold off Friday. And that's what we saw with a lot of the pre-market gap runners, is that, especially yesterday on Friday the 5th, they gapped up, they ran up pre-market, and then in market they just kind of sold down. So that's one pattern to be aware of, is oftentimes when you see extreme gaps, the gaps may fill, and that's called a gap fill pattern. One thing that I urge everyone to do also is to use trailing stops, because often you get a reversal. The pivot times of the market are typically around 10 o'clock in the morning, then again 11 to 12 with institutional buy and sell programs. You can see the pivot here right after, it was around 10:40 or so, right before 11 o'clock, the big pivot. And then oftentimes you get a pivot into the close around 3:30. Anyway, the way to manage your trades for day or swing trades is to have at least some of the shares use a trailing stop level. And on a stock like this, it might be a 30-cent trailing stop. On one like CHK, you'd have to use a multi-point stop. Or when I trade some of the other instruments that are priced a bit higher, you have to use multiple points, but also combine that with smaller share size. So for example, if I were trading this, I would just trade maybe 30 shares with a like up to a $2 trailing stop. But in general, maybe a dollar, $1.50 even. I like to day trade small with stops under $100. And oftentimes when you see high volatility, you see things get halted after a big run up. It's kind of a final parting thought. The exit into the skyrocketing breakout pattern. See how sharp, when the breakout angle is a really sharp angle and something's run multiple points. And this occurs more often for the stocks under $10 than the ones up in the $20 share range. But it can happen on occasion in charts like this too. When you get a near vertical breakout to the upside, it's a smart idea to sell some of it, because often you see circuit breaker halts that may gap against you like this one did. So, if you bought 21, you wouldn't want to sit on it and then close it out at break even. You'd buy 21 and sell 23 or 22 and a half. Of course, the trick is you don't know when it's going to stop running. So what you want to do is, if you're doing a more professional scalping approach, do scale out along the way up. And that way, the goal is to be protected against reversals due to circuit breaker halts. And when you're using swing trading scaling, use wide points. And something I'd mentioned for my swing scans and live room members that I'll mention for you folks too is do be cognizant of using wider entries for your position sizing. So for example, if I bought, say, 50 shares at, say, 26, I'd buy another 20 shares up at, say, 30 or 31. Or if I bought, say 100 shares at 15, I'd buy another 50 up at 18. Or if I bought, say, just 30 shares at 25, I'd buy another 10 shares up at 31, 32. Whatever the numbers are, but do scale accordingly, and do have a strategy designed to have a sequence of 2 trades, where the first trade is initial position, the anchor position, and again it should be under 100 shares, or at least that's how I trade, relatively small, use a relatively tight 2 or 3 point maximum trailing stop, initial stop value, and then scale in every few points. And with charts with wide ranges, you should space out your entries further multiple points than you do on the less expensive instruments. And I'll wrap up by looking at some of the inverses that are on fire sale now, right? the market gets frothy like this, and it's done a spectacular breakout. Irrational exuberance is a phrase from the past that comes to mind. Maybe worth looking for bounces in instruments like our small cap bear. If and when they bounce, say over 12 on this. Because look at the upside in this. This thing had been 20, 30 bucks a share just a few weeks ago. Now it's down at 10. And often it's the tricky thing about inverse instruments that go up when the market goes down is the best time to buy is often when they look the worst, because of their inverse nature. You're looking to buy low, sell high. So we don't want to overload the boat on some of these, but if they do start to bounce, what I look for is at least a 2-day uptrend with at least 2 green days in a row. At 30, TZA has the same chart pattern. FAZ way down at 14. That's a finance triple bear. And our SQs, of course, way off with the NASDAQ reaching new highs. The SQs now down at new lows down here near 8 and 9 a share. So you don't want to catch a falling knife. And the way that I usually plan on avoiding that is to see at least 2 green candle days in a row and then buy on a high above the 2 green candle days. So for example, here we have 2 green candle days, but we didn't break above the high. Here we had 2 green candle days, didn't break above the high. 2 green candle days, didn't break above the high. And these don't count as 2 green candle days because they're doji and they're flat. So you want to see the pattern to look for for reversals is 2 green days with some whole real body green candle height. And you go along, say 50 cents or so above the high of the second green candle. So this may set up nice. We may get one candle on Monday or Tuesday, another on Wednesday. Maybe a pullback day, up Monday, up Tuesday, pullback Wednesday, and Thursday's a big breakout. Or we may get just a gap run on any day on bad news. So do be prepared to play the inverses as well as the directionals. And oftentimes it's a good idea to pair trade those against each other. So in the meantime, market's looking frothy. I'm going to wrap up here. I just want to thank y'all for being here. Do consider joining my live room at tradingopen.com. I'll see you guys on the other side. So that's my thoughts for the upcoming week ahead. Light share size, things like casino and occasional gap runners. And so the casino stocks and the oil stocks look really good. Oil and energy and casino are 3 sectors that are strong, and semiconductors. And we'll see what we see when the market opens up next week. So my best wishes for success in your trades, and I'll see you next time. Take care. Bye for now. While it's on your mind, visit www.tradingtheopen.com for the live room info. See you there, and goodbye.